Alright, good morning fellow traders. This is Pete Soares from Techie.com. It is Thursday, September 1st, just around 7 a.m. Eastern Standard Time. In today's video, what we're going to do is cover technical analysis on the New Zealand US dollar. You can see that we're in the 4-hour compression where I begin my analysis. Now, what I'm looking here on the 4-hour compression is I'm definitely looking at an area of the New Zealand dollar. Currently, we're coming off of a uptrend here in the marketplace. What we can definitely see is that this is an unsustainable trend in the marketplace, and we did not anticipate that this trend was going to be long-lived. So you can't really trend this market at this time. And also what's important to realize is that we're looking first off for a counter trend trade, because we're looking here at this consolidation, and you'll see that we'll build technical analysis upon anticipation of the market reversing at this point. But the first key factor is that this is an unsustainable trend in the 4-hour compression. So what I want to do is I want to go ahead and take the fibs of my last leg here on the 4-hour compression. We can definitely see once again it's coming from this bottom here up to the top, and I just want to take those fibs for potential areas where I can anticipate the market is going to look to take out, if this is only going to be a retracement to build a sustainable trend, or for that matter if it's going to be a reversal to build a new trend. But no matter what, the market is still going to look to attack key areas of retracements. Now again, what we usually look for is the 50% retracement when we see a market moving under normal conditions, and we can definitely see normal conditions here in this marketplace at this time. So that 50% has become a very nice area of opportunity right here, coming at the 84.15. But what we're going to do is build more upon that theory. So here in the 4-hour compression, what we want to do is we want to also take any areas of significant resistance that we in turn anticipate are going to be areas of profit taking in the marketplace for the movement south. So we can see here on this 4-hour compressions, we can see all of these resistance points, and what's very important is we can see how the market has reacted off of these levels. Okay, so these 4 key levels right here have sent the market rushing off, on average over 200 pips. So what we want to do is we want to take those and we want to mark them so that we can anticipate these are going to be potential areas that the market is going to look to target on the current movement south that we're anticipating. Okay, and that should be good for it now. So all we have to do is we have set up some zones here that we can anticipate on the 4-hour that the market is going to look to attempt. Now let's just take this down to the 1-hour compression where we can do further analysis, getting a closer look at data. Now the very first thing that sticks out to me right off the bat is to note that in this area right here we can definitely see that demand is in the marketplace, and there's definitely a demand line being respected. So what I want to do is I want to go ahead and mark this line of demand so we can take a look at it, and what we can see here is how the market respected the demand and buying occurred off of that. So there was demand in this marketplace, then what we had was the violation movement come through, and then we had the market hook back, and from here we have been trading south. So what we can now do is we can anticipate that this is where supply has come back into the marketplace. The chart is definitely showing that, so what we want to do now is we want to go ahead and build upon this further. What you can also notice that if you were to connect these tops here in the marketplace, that what you would be creating here is a rising wedge in an uptrend, okay? And a rising wedge in an uptrend is a reversal pattern, okay? So we've now built upon further what is happening here in this marketplace. What we also want to do is we want to take our Fibo targets of this movement right here, which was the initial breakout movement, and we want to see, is the market respecting on this movement south potential fib targets of that 1-hour movement. Okay, so doing that, what we're going to do is create a set of targets. Okay, and now what we can see here is that we have created 2 key points of confluence in the marketplace, and we can see that happening here at the 61.8 Fibo target overlapping that 240 PSR at the 84.65 price level, and what we can see here is this 84.24 price level, which is a perfect overlap of a 1270 Fibo target with the 240 PSR, and it is also sitting just about 5 pips below the 50% retracement. So at this area we have such a strong area of confluence happening that we anticipate that this 84.25 price level is definitely where this market is going to be going here intraday on the New Zealand dollar. So we've created a target, and what we can also see in here is that on the breakout of the movement. We had a pullback to that line of demand, and from that we had the market trade south beautifully down to the 270, and from that 270 what we had right in here again was another 50% retracement. So 50% retracement here, 50% retracement here. Now what we need to see is this market take out the 61.8. Now what we can see right here is that we have taken out within a range here of about 5 pips or so, that 61.8 overlapping that PSR. So what we want to anticipate is we want to see now a 50% pullback of this entire movement right here. Okay, and then that would in turn give us an area where we can be interested to sell this market for that 84.25 price level. Now going ahead and taking those levels of fib targets, excuse me, for the fib retracements, what I'm going to do is make these a orange color so that we can tell the difference. So now let's just go back here and take this to a smaller compression on the 15 and see what we have going on. And we can see that we have this 50% retracement lying right here at the 85.29. Now I'm going to make this red so I don't confuse it with my other lines. Okay, so 85.20 is an area that we're looking for this market to take out to the upside, but only for it to come to the 85.20 and set up an opportunity to go short here to that 1270 fibble that we talked about, overlapping with the PSR and overlapping with the 50% retracement of the movement north at the 84.25 level. So you're looking there is you're looking for an opportunity to take out about 90 to 95 pips on the pair. And also we can see here is how tight of a stop you're going to be able to pull on this, because what you would be doing is trading a technical stop on this, and your technical stop would be 5 to 7 above your last point of support or resistance, in this case resistance on the chart that you're trading, coming at 85.25. Okay, so you could place your stop at 85.33 with be about 13 pip stop, going for just around 9.95. So great opportunity right there on the New Zealand dollar. All technicals are lining up to future sell-off coming in here on the pair. So with that said, an entry order can be placed at 85.20, stop at 85.33, and a limit at 84.25. That's what we have for you today. Hope you enjoy that. Until next time, folks, good luck and happy trading.